You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon, everybody. Welcome to Master Trader Live. Today we're going to show you something we've been scanning for forever and scan for every single day because it's one of the most powerful signals, which we'll explain why and all the other things that we do explain at Master Trader Live that go along with a particular concept, because one concept, even one as powerful as this, without the other pieces of the puzzle, technical analysis puzzle that we review, won't get us very far. So as we scan for these, we'll show you the scan, and we find them, then we go to the charts and we look at where did it form in relation to support and resistance? What is the trend? Is there a tradable void? What kind of relative strength or weakness is it showing? And they come in two flavors, bullish and bearish. So as we put that all together, it formulates a strategy, a trading strategy. And then what is the instrument that we're going to use with this strategy to profit from it? Directional trades, credit spread trades, debit spreads. So we can pick different vehicles depending on how that sets up. Sometimes it is directional, sometimes it's a income producing credit spread trade. So we'll look at different patterns on how we decide that and create what we call a thought process. So let's get to it.
Good afternoon. All right, great intro like always. Let's jump right into it. And Greg, you actually were talking about this slide. So just to summarize again, we're technical based traders, no setup, no action. That is the starting point. Give me a setup. And then Greg mentioned that, okay, where is this pattern setting up in connection with the trend? Multiple time frames, relative strength, weakness. What are the broader markets doing? We want to trade with the broader markets unless it's on a sector or stock doing its own thing. And then we simply manage and enter and manage in between per your trading plan.
That's it.
So I found here, Greg, Little Johnny. And the reason I'm showing Little Johnny here is because today we're going to be talking about wide range bars. Little Johnny's saying, well, what's a wide range bar, Greg? And the answer is big fat green bars with little or no tails, Johnny. It's that simple.
It's bigger than you, Johnny. Which means it's bigger than the bars that preceded it.
Right. But so now on a kind of just a more detailed answer, I kind of just swag number like twice the size, but you'll see in the examples, they just jump out at you. But
Right.
For those that are wanting a more concrete answer, because you can't program big bar in your scanning software, then you're the one that programmed all these, Greg. But my thought would be, I want a wide range bar that is twice the size of the prior 30 average. Does that make sense for a scan?
Well, we do have a scan.
No, I know. I'm asking you the formula. Does that make sense?
Oh, I suppose so. I mean, I just look at the scan, which we can share with everybody.
Yeah, so let's do it later, but let's do that. So these are just candlesticks, right? So this is a wide range bar relative to the prior bars. On today's session, we're going to be talking about explosive patterns, igniting and ending, that are like this, wide range bars, and I want little or no tails. This we're not going to get into today, but it's also a range expansion bar It's just the open and the close and the high and the low could be the identical range of this bar, but they formed differently. So they're still powerful range expansion bars are, but on a wide range bullish bar like this, and a wide range bearish one like this, there's no confusion of who won the battle in that bar. So now we're going to take those pictures today and find patterns. So I put up here, discuss wide range bars in these patterns. They could exist on every one of these pictures. So a wide range bar is not a pattern. I mean, it could be, and we're going to show you, it could be just a wide range igniting breakout from a consolidation. So, we're going to have different levels of shock of these WRBs. So, for example, I would say, Greg, there's only, I would say, 2 of this whole list that have WRBs as a prerequisite. So a bullish 1, 2, 3 continuation, by definition, it's a very simple setup. It's a wide range bar, big fat green bar, little Johnny, with little or no tails. I want 1 or more inside bars, and we buy over the high. And we apply the other concepts that as we do with any trade idea.
So when you say prerequisite, the wide range bar is defined as that being necessary. So any of these that I've circled could or could not, but if they did, it's an additional bonus as to that particular reversal. So when we look at a bullish 180 reversal, it's not a prerequisite that it's a wide range bar, but when we go through the bullish 180 scan, we can actually add that to the scan, meaning I would put it in a column versus making it the scan, because one thing that I found is that when you make these scans, the initial temptation is to make it perfect. Right? Show me this because that's the money. But you miss so many things. So the scans are looser, if you will,
Sure.
But then we can define that scan by adding a element to it that isn't part of the scan, but it's part of the watch list. And then it could guide us to that wide range bar on that list. But we'll show you later.
Yeah. All right, so but you talk about these, they're your scans, and I just typed a bunch of setups that we like, as you said, to give me a ballpark to start scanning for setups from.
So right, and to it, Dan, we are both so guilty of over delivering.
Right.
And it's like I'm reading this and thinking, okay, I get it. I don't know if everybody else gets it. When we say a wide range bars and momentum moves in a smaller time frame. That's getting into multiple time frame analysis, and it's which then gets into there's a void somewhere, and what does that mean? And so much conversation. But yes, but here, right, this is a key point, right? Are they igniting? So there are different flavors or ending wide range bars. So again, as we go to a wide range bar scan, you have to know our method as to interpreting the validity or the power of that. So sometimes you get wide range bars and they say, hey, momentum is going to stall. Bullish 1, 2, 3s. That's a requirement in the scan. Otherwise, it shouldn't come up. Can they gap from there? Pullbacks into a wide range bar. Now, what's acceptable? What negates the wide range bar? So you get deeper into the analysis and understanding how we utilize this. Failed ones, they're not supposed to fail, but if they do, that's a great starting point for a credit spread. It may kind of blows it out of the water for a directional, but depending on how it sets up, engulfing reversals, shakeouts, these are all other patterns that we utilize, like on that slide, to say, well, here's a bullish 180, but is that bullish 180 a wide range bar? Was that is that part of a shakeout pattern? So as we add more analysis to this particular piece of analysis, we can then discover more and more powerful patterns that put the odds in our favor. Right? And this is Dan's creation, the bullish and bearish sandwich. He was hungry that day when he thought this one up about 20 years ago.
Well, and it's a derivative of two of these other ones is all.
Right.
It's a 180 reversal followed by another 180 reversal. That's all it is.
Right. And we talked about that this morning, in the concept of multiple time frames and that kind of a reversal in the green room today as to where's this crazy market going to go by the end of the week, and what would the message be?
Yeah, XHB. So I like doing this on these educational MT lives here. Just take a look at this. We're not going to talk about it now, but we're going to at the end, and we always save time to do live scanning, but we're going to come back to this with all of our notes on it. But just take 3 seconds and look at this. Can you do any of these wide range bars convey messages that are important, number one, and do they set up tradable events? Come back to it. So here, this is the point that on that prior slide, Greg, that I said we will define it. Wide range bars create voids on smaller time frames. So this is a daily chart. This isn't a big sideways multi-month consolidation. Every one of our charts on the daily is this clean. We have the 20, the 50, and the 200 period moving average. So something changed here. 99% certainty it's news or earnings or whatever. So this is an igniting bar. So yeah, take it from there and tell them about, the void in creating support over time.
So most analysis tools revolve around indicators, which try and define the things that we interpret by reading price action. So when we say a wide range bar is a momentum move in a smaller time frame, that's what is being highlighted here. And that wide range bar is a power, it's a power bar. It can be an igniting bar or ending bar. That's an igniting bar. It's a power bar coming out of this consolidation on the daily time frame. That creates a thought, hey, that power bar should follow through at some point and go higher. I've highlighted on the 15-minute chart that it's a power move up. So now, if you think about your thought process, if you saw a power move up, you'd probably think, well, if it pulls back, I'll buy it. Well, sometimes they pull back tremendously because there's no support under here. There's nothing, right? And it could potentially pull all the way back down, and that wouldn't be in alignment with the message. It could happen. But once it starts to pivot, what's a pivot? A bar with 3 higher lows to the left and right. It begins to create support. And here it's done that over time. So this has got multiple pivots, and why Dan has this nice green rounding bottom here. So what happens with this pattern on the number 2 bar is what's happening on this consolidation. And this little dip here that occurred is the bottom of that bottoming tail bar right there. And it begins to form a little, it gets more and more intricate here, but you start to see these things as you do this for a while, and you've got a nice, these pivots forming a little rounding bottom right here. And now look at that wide range bar. So you've got a little mini 1, 2, 3 within what's going on here. And so these messages coming together. Now I've got an igniting bar out of a big giant rounding bottom with a daily chart. As you can see, that's bottoming and bullish. And so it's like, oh, I think that'll go up. So you've got multiple things coming together here to make a great day trading opportunity as well as a swing trading opportunity.
Yeah, a beautiful late day breakout. And Greg mentioned in the intro, once we have a setup, then we decide how we want to trade it, stocks, options, both. And so this is our Telegram alert, and these are two different advisory services. Not only did we give this as a bullish directional option trade where we bought call options, sold another one just to make it a cheaper position, and then we sold out of the money puts. And this is, I mean, look at the 50 MA down here under the WRB is $97. Once this 1, 2, 3 triggers right here, the odds of this stock staying above this $97 in the next couple of days are staggeringly high. Does that mean it can't gap down and hurt us the next day? Of course not. There's nothing you can do about adverse gaps, but such a high probability setup for bullish directional, and we took in 48 cents a share. And what that means is, hey, if I sell 10 of these contracts, $480 goes right into your brokerage account. And you have an obligation to buy Nike on or before expiration at the $97 strike price. But we approach option trading with our same technical approach, starting with a bias. And Greg and I both like saying it's a no-brainer. And then if you just have the patience and discipline to only put on no-brainer trades, then the odds are overwhelmingly in your favor for trading. So here's, we said we would define this for you: wide range igniting and wide range ending. Let's start with the igniting. So we have a long consolidation. It's just burning off steam. This is a daily chart, bottoming pattern. My 20 and 50A are flattening out, which means by definition, the way a moving average is calculated with dropping off the last data and bringing the current data, it's telling me it's bottoming. So look at the size of all these bars. Hey, little Johnny, do you see something different about this bar versus all these other ones? Oh, yes, I do. It's an igniting bar. The concept of the price void means look to the left. If there's insignificant resistance because of the momentum move down. And we have another 1, 2, 3, which is a gift. We love 1, 2, 3s for this reason. It's resting. I tell people that a 15-minute chart, I have 26 bars, 6.5 hours in the market day, where this thing has bullish consolidation. So that's that. Wide range ending. And this, last Monday, we did Greg, we did MT Live on reading volume spikes. This is a great example of ending volume and igniting volume. Notice the pickup in volume on the igniting and the ending. What does ending mean? It's the biggest red bar after a huge fluid decline far from the 20. That's the definition.
A couple of questions here related to the same thing that we've gotten over. What about the resistance to the left? Well, there is no resistance to the left. The idea of a void. This is a power bar in a higher time frame that created a void. This is the smaller time frame. So if we are looking at this, well, on a weekly or a monthly, because this looks like a daily chart, and you've got a couple.
Greg, he actually was talking about this one, but
oh, okay. So with this one, this is how we view something like this. Support and resistance dissipates over time, as well as the price action that occurs. So when you look at this unfilled gap here and this coming down, when you're close to it like this, it's important to know what's to the left. It's powerful. But over time, and when you get breakdowns like this, in this case, it didn't follow through, you get this sloppy congestion going on. And this movement, right? This movement over time begins to dissipate what's here. So this really comes down to common sense. And the reason the majorities can't see it is because they have these blinding masks on called indicators versus looking at the price action. And the indicators take away your common sense, but you have to learn this thought process. That's what these MT lives are about in the courses, creating a thought process.
I love that as a title, an MT Live title.
Write it down, Dan. I'll forget it in 10 minutes. But so when we see this power bar and we put this in the context of what preceded it, what is more powerful? This, that igniting after all of this price action, or what's to the left? So something's making new all-time highs. There's nothing to the left. But every trade that we're going to do, more than likely has something to the left. Because even if it's in an uptrend, it's got a prior high. So if the trend is up, we have an assumption that it's going to make a higher high. We don't know, but that's our assumption. So the other question was, how far to the left do you look until you see something? And then you put it in the context as I explained.
Greg has a saying, it's the same but different, and we're going to give you as many examples as we can, as always, and then save time for scanning, because we're going to show you these scans and look for new opportunity that we can trade over the next few days. So this uptrend, down, up, nothing to do, igniting bar. And I'm going to show you the intraday charts on a lot of these for two reasons. One is because they set up many times incredible day trading opportunities for us. And secondly, we use the intraday time frame to enter the swing pattern on the daily and then go back to managing it on the daily. So this is in an uptrend, consolidating at resistance, and boom, what happened? Well, let's now look at this. It's a microscope. A smaller time frame is a microscope of the bigger one. So notice this vertical dotted lines are 1 day. So notice this opening of this candlestick at 9:30 Eastern time didn't clear the prior high, but this is what we call, an end of day base. So the fact that it gapped over this, all of these bars become support. Now it just blasted through these prior highs over here. A whole week of data, it blasted through it. So I know if this were a gap MT Live today, Greg would be talking to you about going to a 2 and 5 minute chart to buy this pullback into the gap, minor support. But we're talking about WRB, so I have a WRB on the daily, and I have one on the 15. Look to the left on this chart at least, and there's nothing to the left, nothing. I would need a bigger chart to go back more months. And then it's Greg's conversation about, okay, which one is significant?
And one thing I would add, because, Dan and I always talk about not only what we use, but also our experiences as we developed early on, as we learned these things. And one of the things that with the wide range bar that I struggled with was, it's such a big bar. How can I get on board?
It ran too much. Yeah.
It ran too much. It's like, we need a slide there that says, hey, McFly, that's a power bar. That's an igniting move. So, which leads into a conversation of money management. and share sizing, because it's possible it could fail. It's unlikely, but when you see it, it's how do I get on board? I can just buy it, with a stop under the low. I might get a 1, 2, 3. I could use an intraday time frame to refine things. So those are choices, but we have to start with a belief, a bias that this is something I want to buy. How am I going to buy it? That's another conversation.
Beautiful. And all right, so I have a couple wide range bar discussions here. This is a wide range bar. Same, the other chart where Greg put a rectangle around here. So this is the morning run, which created this big igniting breakout on the daily chart. So we're watching this to get on board. Ugly red bar suggested lower prices. It didn't go any further. So we call that a wide range bar ignored. And then it had bullish consolidation into the afternoon reversal periods, closing breakout, wide range breakout on the daily with a price void. This is what we call a no-brainer late day breakout. Buy over the high of this bar, stop under the low of that. Even though I wouldn't call this one, Greg, a wide range bar, right? Particularly on the day relative to these, it is a range expansion bar relative to these last, whatever, 10 bars in a closing breakout. So that, Greg, you use this term, the tell. That bar is the tell. Range expansion, closing breakout, red bar ignored, bullish breakout bar on the 5-minute on the daily chart. Another concept. This is bullish retracement consolidation. It didn't retrace more than a third of the morning robust move.
Oh, Dan, you're probably wondering, as everybody else is, what is with all my artwork that I'm putting on here?
I love it.
And what I am showing you now is to bring about a realization that that daily chart wide range bar didn't look like that in the middle of the day. The intraday price action supported a belief that it could look like that because it wasn't a wide range bar as it's defined on a daily chart in the middle of the day. The intraday price action supported a belief that it could, why you've got this breakout here, but in the middle of the day, it was a small bar. And why I marked off this $50 area to show you this consolidation here, right, was over here during the day. And so as we see this start out, and in some other scan, it would have picked it up in the morning, or maybe for whatever reason you're looking at it. But as you're looking at this and looking at this pattern, I'm going to bring you back to someone else's question. Well, what about the resistance to the left? Can it get through that? Well, this dip down, right, nearby would be more concerned. This partially tested it, and then this went sideways for a while. So you could have a bias that, yes, I believe it could get through it, and the intraday price action being what it was, let me place the trade and see what happens. So there are a lot of things that we could discuss. And so I'm going a little further into the explanation since questions were asked, but this is what we do and teach as far as understanding price action. And I repeat it again because it's one of my pet peeves to help people get away from using indicators.
Another 1, 2, 3, this is a definition, and again, we're always overlaying multiple concepts because we're trying, I ask students to rank the quality of a setup from 1 to 10. And the more things we can add that support it, the better. So this one started with a breakdown failure. Broke down under support, rolled over on the 20 and the 50 period moving average, igniting closing breakout, and it rested for 2 days. So that's 52 bullish 15-minute bars if you went to a 15-minute. Now I have a closing breakout at the top of this. Are you kidding me? This is like a gift of a 1, 2, 3 in an uptrend. I have rising 20, 50, 200. So another, 1, 2, 3s are one of my favorite setups, but as you've learned already, the 1, 2, 3 starts with this powerful bar that we're teaching you today. Everything we teach can be applied on any time frame you want, on any instrument you want, stocks, bonds, ETFs, futures, cryptocurrencies, they all work the same. So this 15-minute chart gap down. So see, again, we're always overlaying multiple concepts. So this gapped under this prior day support and didn't go down. It was bought. Now I have my inside bar. That would have been a no-brainer 1, 2, 3 day trade, because I don't know what the daily chart looks like, but it didn't trigger. The next day, it gapped up, closing breakout over the prior day's high, inside bar, no-brainer day trade. Next day, gapped up over a bunch of resistance, inside bar, no-brainer day trade setup. Your trail methodology would dictate how to manage that. 1, 2, 3s here. I love them when they set up with all our other concepts. So this is a bearish downtrend, bearish consolidation, bearish retracements, green bars ignored. Look at my declining 50. This was a consolidation into a declining 50. Now range expansion, little Johnny. I have the biggest red bar ever since this bar. That's my biggest one. And it's a closing breakdown. Now I have a bear 1, 2, 3, nothing to the left. It's a no-brainer. You short under the low stop. The initial stop is over. You got to give them room over the high of this. Once it gets altitude, as I say, which just means the trade's working as predicted, as intended. Then we go into a trail mode. This was just a simple trail, made 30, 40 bucks, depending on how you trailed. You had something, Greg?
No, I mean, the wide range bar, why is it an igniting bar? Because it had almost 2 months of consolidation when it broke down. So, and the void below. So there was that resting period. So it's an igniting bar versus something that, maybe that could fall, maybe it could fall to 300 and it got climactic and there's a wide range bar and that would be an ending bar.
Yeah, we showed him an example of that. We're always just showing you different flavors of things, right? So this was a bearish gap down in a downtrend, bearish gap. My bias would have been lower. But whenever we trade gaps or have a bias at the open, we just put them in a 5-minute chart and we watch it at the close. So I expected this to go down lower, but it's in an area of a prior low where range expansion, bullish green bar, right? This is the biggest, it's had a nice move. And look what happened here on the bearish gap down on the 15-minute chart. Wide range igniting bar that negated the bearish gap down. That's what we just call that, a bearish gap that bullies. So when I see one of these, just like every other pattern we see, that doesn't mean, oh, it filled the gap, let me buy it. No, what's the setup? Is there a price void? So this thing kind of just consolidated the entire rest of the day after this morning run. We entered it the next day on this bar because I have a big price void with a bear gap negated, wide range igniting, and we bought over this intraday resistance.
Is pointing out that retest in the gap reversal. I mean, that's another no-brainer, put spread setup there when a bar like that.
Yep. And yep, look at the volume.
Yeah.
All right, so this one I got 2 slides here. So MGM here. Now, so Greg, when this gapped up, okay, I got a bullish gap, but I'll put it in a 5-minute window and I have to watch it. Would any of us have expected this? The answer is absolutely not. It didn't clear resistance. We just started with a bullish gap over a topping tail with a rising 20, 50, 200, okay? So you take it from here. Here's go ahead, I'm sorry.
This is the intraday chart, 15-minute chart of what we were looking at. And the pre-market data is right here. Right? That's these lines right there. And he's got marked pre-market. So it consolidated after the gap up. And, this is something I would definitely be looking at a smaller time frame than the 15-minute at the open. But that's a choice. So it explodes up. That's a wide range bar. Now, this pullback, and I'm always looking for some reason why prices stop there, right? And I'd be thinking, well, what's inside that wide range bar? Now, this pivot, that blue dot, which means it's got 3 bars, you don't get the pivot until this bar right here. So this is the pullback pattern to get on board. So once it pulls back and it begins to reverse, you've got a setup there to consider as a buy setup. And that's, why it says buy setup there as part of this wide range bar pullback there. And go back to the daily chart. Yeah, maybe there's something there.
Yeah, I said add because we actually bought over the pre-market high. So that could have been 5-minute high.
Okay. All right. So let me say bought here. This is the recommendation that was in Telegram. It gets posted to the Telegram, real time as it's happening. And, the analysis Dan explained the pre-market and why getting in at 46.11. At 46.11, how do you know this was going to happen? Well, as you look at all of this, and then this is part of the gap trades, and clearing the resistance, nothing to the left or whatever might be far off. It's like, okay, it makes sense. Ben's asking, do you only consider pullbacks after a wide range bar that are less than 30 or 50% deep into the wide range bar? In other words, do you ignore pullbacks greater than 50% deep into it? No. So, and the reason could be it could pull back. When we see a wide range bar, part of our factory work says, hey, well, if a wide range bar occurs, prices should not close more than 50% into the bar, right? However, it could dip down more than 50% and then come back up again. So as we look at patterns, right, it's possible that this could have been a bottoming tail bar where it dipped down more than 50% and came back up again. And that would be just fine. And if that was to occur, we'd be saying buy above the high of that bar right there, that little inside bar. So everything, like the question you're asking, everything is a part of a strategy. None of them are actionable. A wide range bar in itself is not actionable because it would have to trade above the high of the wide range bar to be actionable with a stop below the low or some other pattern that could set up. So just because it dips down more than 50%, that doesn't mean it gets removed from the watch list.
BC says asking, do I always look at weeklies for entries? No, whatever time frame you're trading daily in this example, unless you're trading the gap as a day trade, we teach just go up one time frame, and it doesn't have to be the same pattern. Doesn't have to be anything like that. It just means does the bigger time frame support your bias of the time frame that you're trading? That's it. Keep it simple. So all I need to know is the daily bullish or even neutral, but I don't want the weekly to be bearish when I'm buying. I mean, you can if you're experienced, because hey, I'm just trading a little bounce in a downtrend.
Now, the part of the answer to that question in real time is like there's some bullish patterns now that occurred even this morning, initially at the open or on daily charts. So even if you're looking at the S&P 500, but it was up at the top of the range on the weekly time frame. So those bullish patterns on the daily time frame had lower probability because the weekly was at the top of its trading range. It went from the bottom of the range to the top of the range. So much of what we talk about, after you learn it, it's just common sense. Right? It's like, what's the probability of a lower time frame moving significantly when the higher time frame has already traveled to its destination?
There you go. Okay, perfect. These were two trades we gave last week to our subscribers, and it's the pattern is the sell setup. Okay, it's not the wide range bar. A sell setup is very simply a retracement and reversal at resistance in a downtrend. The opposite for a buy setup. What I have here in this big red cone is showing you that it's a multi-bar reversal. Sometimes it's not just one bar reversal, 2-bar reversal. We get chop up, down. And Greg, let's show them square SQ when we look at charts, because that's another great example of this. But today's session is wide range bars. So once this gapped up in range expansion, closing breakdown under these 3 bars, now I know that you're ready to go lower. So like we've showed you on a couple other examples, we bought a bear put debit spread where we profit with options as the stock moves lower. We made almost 20% here in 2 days. This is a closed trade. 2 days lower, make 20%. This is identical pattern, a trade we gave to our weekly options trader, where, as I said, we're technical based. So it starts with the same pattern. I think this is going lower. Okay, I go to my checklist. We short this $2 wide bear call credit spread, 23 cents a share. I say, I don't think this thing's going, and it's going to close above 38 bucks at expiration. How much are you going to pay me to take that risk? I go to the option table and I see how much I'm going to get paid, provided the options are liquid. If you sell 10 of these contracts, 230 bucks goes into your account, and you make money through time decay and volatility contraction and when the stock moves in the intended direction. So we love selling credit spreads because you don't have to pick direction. You just have to say, I don't think that chart is going through that support or resistance, and you get to keep the premium.
Couple of questions here. I could look at the chart he's talking about. He said he bought TLT at 108. And
do you want to wait till we get to real charts, which we're kind of running out of time?
Yeah, well, I think he's just saying something happened. He was looking at a moving average, and we've had moving averages discussions. They're subjective, but they're intelligent ways to use them. And the other question was, do you need to look at the weekly time frame? No, you don't. But as we set up our daily time frame, that 50 MA is equal to the 10 on the weekly, and it's pointing down. So we know that the weekly trend is down. This is connected to the monthly time frame, and this was pointing down. The bar by bar analysis, all of that supported it was going to go lower. And so from an intraday trading point of view, look, if I'm trading off of a 5-minute chart, I don't need to look at the weekly time frame. I'm going to look at the daily, but I don't need to look at the weekly time frame.
All right, a couple more here. This is just, so here's a wide range ending. This thing fell from 400 and change to 280. And this is the biggest red bar since this was an igniting red bar here from a failed buy setup. That's an ending one. This is the pattern we called a 180 reversal. Big fat red bar followed by big fat green bar, and went sideways. It didn't go lower. Now I have a closing breakout, good to go. We have a concept again we've talked about called wide range ending. This is a wide range ending in an uptrend where greed is crazy high, which we get manias all the time, as you know, from crypto days. Now it's the artificial intelligence, things have been going crazy. So this is the actual alert we sent in our Telegram. I mean, just look at this, folks. This is the biggest bar after this thing came out of a coma at $2. The next day, then it gapped up. Here's my pre-market, these dotted lines. It ripped pre-market up here to almost 26 bucks. This would have been what I call a tier 1 gap trade for us that day, that I'm gonna short you. It's just a matter of I need my setup to have the confidence to do that. And you can see this thing just collapsed at the open. All right, so this is the chart I started with, and I said we'll come back to it, and then we're going to switch over to look at real charts. So let's just look at a couple of these things that I have marked here. Okay, this ugly red bar suggested lower prices. Okay, NFT means no follow through. So that's something to take note of. I have a rising 50 and it doesn't want to go lower anymore. Then it gapped up. I have a gap reversal. This was a gap breakout and went deep into this bar. That's danger, danger. Breakout failure, wide range igniting with no support to the left. A bounce now. Range expansion, sell setup. That means sellers are taking control. What did this bar look like at the low of the day? An ugly red bar. And do you remember on that first slide, I said a range expansion has this, it just, the open and the close and the high and the low were different. So this was an ugly red bar, range expansion, and now the close green. After a multi-bar fall, that's telling me it's a short-term bottom. Another excellent example for a put spread. Now I have a closing breakout, range expansion again. Now breakout failure, closing breakdown, range expansion. So I'm range bound now. This would have been a great example for an iron condor, selling out of the money call spread, out of the money put spread, because it's just range bound. So you can grade yourself on that. Let's turn over and look at real charts. But every time you hear Greg or I talk about charts here, this is the starting point for trading anything that moves, is Greg's swing trading course. And he puts it together in all these thought building modules. So it's not subjective, meaning, well, I think it's going to do this, or subjecting your own wishes on the chart, which is not reality. And so we objectively put these concepts together, and that's what this course is about. Any?
Gotta read into the whole thing and tell everybody. BC said, I used to bite off more than I could chew and got so overwhelmed and threw in the towel. Now I need to take baby steps. Haven't we all?
But
All
also,
follow that path, because we think, and it's normal, we all think we need to know so much, and we're explaining a lot of stuff here, which eventually becomes second nature, but you eventually realize you can't know everything, and so you have to limit what you look at. And of course, for me, it was like eliminate all these indicators and too much thinking, and boil things down to something that's relatively simple, and then work on your patience and discipline to not trade things that don't meet the criteria that you define, and things begin to work. So,
all right, let's pull up charts and we'll answer anybody's question, any setup, any time frame, and obviously we like focusing on today's subject. And Greg can pull up some of the scans that we use for day trading, swing trading. But yeah, Greg, show them square, since that was another sell setup, and today's the nice wide range expansion bar.
yeah, one of the things I wanted to point out today, because we kind of use this as a market gauge. Not we know what the day is, but look at how many bearish wide range bars there are and how many bullish wide range bars there are. There's 9 bullish ones and 447 bearish ones.
Right.
That's a nasty day.
Right.
What service subscription looks at the swing and options trader, Neil? So I put a link in there for you
I'll
can
do
put a
it.
specific link, but I put the member link.
Yeah, I'll do it if you want to keep
Where, and the reason I have the euro here, because Tim asked me about the euro and the British pound, and I said, they look good. This is close to resistance. And when I pointed out to him was that, UUP is next to this prior low, the dollar. So those could turn. So you'd want to keep an eye on this to see if it keeps falling, and then those would go higher. So keep an eye on that. Square, right? It's in the wide range bar scan, as you can see. It just highlighted it there. And this thing's been tormenting us for what, a week, Dan?
Right.
Where we started with it over here, and it just whipped back and forth, and now as the market's turning, and it's even got a downgrade, I think, 2 days ago. And so now it's igniting to the downside, and it should keep going down. And I've got a weekly chart there, so that you can see that that's bearish. But here's your 5-minute chart. You're igniting wide range bar this morning, and now it's just kind of gotten quiet. It's not bouncing after getting extended, and that's bearish. Well, it's good for the bearish turn. I mentioned this one to Dan this morning. While it's moved a lot, I said, we've got an eye for this for a credit spread, because there's premium at 200 at the 200 strike, which is a whole number. So it's not likely to get through that anytime soon. And so here's the bullish wide range bar. There's only 9 of them. No, that one's up for the second day in a row. It was probably in there. And this one, it's going up for a while. So they're not all going to be igniting ones. And this is up the second day, but on the weekly time frame, this is one you'd say, hey, that's possibly bottoming
On a pullback.
new all-time lows, but it could be on the list for next week that maybe it consolidates or could go higher. So if it ends like this, it creates a bias. I'm saying, look at the 15-minute of the spiders. Change it to 15. Well, that's a range expansion bar, Don, if you're talking about this one. And I don't know how much time is left in this 15-minute bar. So that's 4 minutes left. this could turn into a topping tail bar in 4 minutes. So, I mean, if it closes this way, maybe it keeps going higher, but it's got the day against it. And you can see it's up at the top of the range here. So I'm not so sure. That bar's not done. And, the cues are kind of holding there here, but I mean, it's just sideways. So you definitely need to see if that'll close. Yeah. Just looking at, a few daily charts. It'll be interesting to see what happens with such a bearish day. Can this actually close as a bottoming tail bar? And so we still have 4 hours or 3 hours to go, and if this closes even like this, if it takes out this high, we got to think it's going to go up. I mean, but there's more earnings reports, banks and such that are coming. We're just looking at a few here. We can sort that by volume and see what's trading the most. So that's up a lot, but it's, it gapped down. So that's bullish. It's a utility. That doesn't interest me. And this one up a few days. That's a little extended and it's close to the high. So it's in an uptrend. I would just like to see more of a consolidation, and look at how close it is to that resistance. So as we look to the left, this is the first time this is testing that area. Some of the static slides we looked at where we talked about something tested it once and it went sideways. So see how this went sideways here? And then you get this igniting bar and this bottoming tail bar. This is a good pattern, was a good pattern back here. And this was actually in the green room, wasn't it, Dan? Procter and Gamble down here, right? Yeah. That was one of the trades. So there's an igniting bar. Not too far from resistance, but consolidation igniting bar, insurance company. Then we look at the earnings. This is going to report earnings at the end of the month. So there's time there. And so you can see we're going through these. There's only 9 of them. But as we get into the bearish ones, and then, we could look at different criteria here. Like this says it's a recent downtrend. And as we can sort that in Wolf, recent downtrend from here. So this looks like it should continue. And the reason I would look at the weekly chart on this is to see if there's anything to the left. And that's near all-time lows.
Well,
yeah. REITs, this is the problem with what happened with the banks. So there are a lot of REITs that got killed. Some of them made the same investments. That's making new lows. That's got room to continue to go down.
Sure.
Another one that's starting to move. It's down a lot. I don't care for things that are so close to support. So something that is a recent uptrend, right? Sorting that. This would be good for a covered call if you were long this. It's moved all the way up, a gap reversal day today. If you were long, it's going to report earnings at the end of the month. Medical instruments, so medical started doing good a week ago, and this has continued. So uptrend. So you can see these all give us like starting points to start looking at different things. This is up at resistance here. We don't know how this is going to close.
Your DHI yesterday was nice.
Yeah, that was an igniter yesterday, and that could continue to go higher. And it's interesting as residential construction, which kind of you start thinking about interest rates, right, in the intermarket analysis part. So TBT starting to go up. And if this goes up, while that chart is bullish, it could be affected by that, like Lennar, so a gap reversal today. So good. A wide range bar is one concept. What's the trend? Where's support? Where's resistance? Is there a void? And then we can get into intermarket analysis and relative strength and weakness to help guide us as well. And these are all things like the swing trading course, I cover that. Into market analysis, trader psychology, market internals. It's not just, hey, here's a pattern on a daily time frame, so it's a swing trade. No, teaches you the psychology, relative strength, weakness, into market analysis, market internals, keeping a trading journal. So there's so much to it, and that's why we hear you can consider it, because we say it's the fast track to really learning. And you can come to 15 MT lives over the course of 15 weeks or start tomorrow. So we'll be back next week with another MT live. I hope you enjoyed. Share Master Trader with your friends and social media, and we'll be back and talk to you then. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.